All right, welcome. I am Jaimi and I'm doing a webinar on loan forgiveness for the PPP loan. And we do have a presentation, so I'm going to go ahead and share my screen with you. All right. Where is it? Here we go. Okay. So I feel like everyone has gotten some of their loan money, so people can take a deep breath and breathe and just continue to remember what you're grateful for and what you're doing to take care of yourself, because that's super important. It's the stress that we are experiencing during this time. Okay. All right, so just gonna go over a couple different terms that we are familiar with, and just as a reminder, because people are still getting confused, the PPP loan is what we're going to be talking mostly about today. They did on Friday the 15th come out with a forgivable loan application, and we'll go over that. This is a 100% potentially forgivable loan. Otherwise, the repayment term is 2 years, and it must be spent at least 75% on payroll. If you don't have 25% worth of utilities and rent payments, that's okay, but you need to do at least 75% on payroll. And like you all did, you apply through the banks. In the event that you choose not to have it forgiven, it does become a loan at 1%, and you have 2 years to pay it back. The EIDL loan, EIDL, is also known as the disaster loan. That's a 30-year term with 3.75% interest, and it cannot be spent on the same thing as the PPP loan, but yes, you can get both of the loans. And then you have PUA, which is Pandemic Unemployment Assistance, which is on top of any normal unemployment that your state might provide. And that is available from March 28th to July 31st. Okay, so if you're still trying to figure this out, Bank Vista, I think everyone on the call has already gotten funding, but I'm still helping other people with their applications, and it sounds like they're going to have funding until the end of June or maybe even longer. They wanted it to go through the end of July, which is when PUA ends, but again, I'm not 100% sure. It just really depends. I think it's slowing down a little bit just based on the rate at which it's all happening. So just muting everybody here. All right. I'll go back. And then the EIDL loan takes a long time. They have over 500,000 applicants, and the max award is $150,000. It used to be not limited, and then it went to $15,000, and now it's at $150,000. And I can speak a little bit about that. I don't know as much about that, but I do know some. If you do get that loan, it will affect the repayment of the PPP loan. So they are doing a grant. They were, I don't think they are anymore. They were doing a grant for that loan for the first $1,000 to $10,000. It was you didn't have to repay it. And so that will count against the PPP loan. And again, you can't use it on the same things. The PUA also takes time. That's the Pandemic Unemployment Assistance, but it is open to all, including people who are self-employed and independent contractors. I saw that there was a question. We'll wait till the end. Okay. So to provide the best forgiveness, you want to track expenses. Can you guys mute yourself? You want to track expenses precisely. So what I've done is I've put the money in a certain bank account, and then I'm transferring it to another bank account. So it's very clear. The other thing I'm doing is creating an Excel spreadsheet, and the Excel spreadsheet also provides a really great opportunity to really be very, very clear and specific about what I'm spending the money on. All right, just muting everybody here. Okay, cool. All right. So you have 8 weeks to spend the money. So you've got the equivalent of 2.5 months of payroll and taxes and medical, and you have 8 weeks to spend it. And then the forgiveness is still being determined 100%. What I'm going to show you today is the application that is maybe for sole proprietors, but very much for small businesses. So it's not 100% exact for the people maybe that are just a one person business, but we'll get into it. Okay, so the forgiveness terms, you will also, you'll owe money if you do not maintain your staff or your payroll, in addition to if you're not spending it on the right things. The number of staff will be reduced if you decrease, your loan forgiveness will be reduced if you decrease your full-time employee headcount. So for example, if you had 5 people at one set of, between January 20th and April 26th, and then when you got the loan, one person decided not to show up, that could affect your forgiveness if you don't do the right paperwork. So what is really awesome is that they're understanding that people may not come back. And so what you need to do is you have to have that documented. So documentation looks like, sorry, I'm not coming back to work, and this is why. So you need to have that in writing for that to not go against your loan forgiveness. So if you don't have the right number of employees, that can be okay as long as you have some type of documentation. If you decrease salaries or wages by more than 25%, that other than somebody who made 100,000, that definitely will affect your forgiveness. And then rehiring, you have until July 30th to restore your full-time employment. Now remember, employees are W-2 workers. They are not 1099 workers. And you have to also make sure that all the salaries for any changes made between February and April are restored as well. So when you're hiring somebody back, you want to give them an offer letter, definitely. If they don't want to come back, you still want them to sign something. So we created a letter that has basically that they're signing their rights away. I mean, none of this really 100% holds up in court, but they're signing their rights away as to our liability with them getting COVID, because we can't control, even though we're going to ask all the employees like where they're working and what they're doing on their own, we can't control who they're in contact with. So in our new waivers, we are definitely communicating. We're definitely communicating that we're not responsible if anybody gets COVID. So that's something that is in our offer letter. We're also saying what the pay rate is, and just basically like a new offer letter. At the bottom it says I decline and this is why, and then they fill it in, or it says I accept part-time or I accept full-time. This is really helpful, and then we can include that in our loan application. You also, after you've offered the job to the people who were previously on your payroll, what you can do is you can hire new people. Yes, that does take time and energy, but you absolutely can do it. And you can pay people the same or up to 25% less. So you can get partial forgiveness. You also can decide to take it as a 1% loan. You can hire new people, and you can pay yourself as a sole proprietor, independent contractor. And that just needs you write yourself a check from one bank account to another, or you transfer it because you're going to need to show bank statements. So the documents that you want to have are your payroll forms, your 941, proof of health benefits paid, if you have receipts for that, receipts for any bills paid or the copy of the check, any lease agreements for rent or canceled checks, like I just said. So remember what you can use it for: payroll costs, including benefits, interest on mortgage obligations incurred before February 15th, rent under lease agreements enforced before the 15th, utilities for which service began before February 15th. So one of the things that's interesting is you may have looked at 2019 and how many employees you had in 2019 at the end, and that's what you used for your loan application. What they're looking for is January 20th to April 26th as far as who was employed. So pay attention to that. It may be different than what you put on your loan application. Okay, so I guess it's the U.S. Treasury did loan FAQs, so we can go into that. And I'm also going to pull up here the actual application. So hold on, I'm going to grab that. And while I'm doing that, we'll look at the questions here. So if your business isn't open yet, how are you paying your employees if they're still collecting unemployment at this time? I was hoping this would pay them once we were back to work. Also, if I'm self-employed and haven't been paid on payroll, but I'm a sole proprietor, so I'll be paying myself, can I just cut myself a check, or do I have to run it through my payroll? Okay, so if you are a self-employed individual, you move the money from one account to another, and you can just cut yourself a check because you got paid based on your net profit. That's how we figured out the loan calculation. If you have employees, you cannot wait until you're back in session. You have to pay them now, and that's why this is kind of, for lack of a better word, a total bummer, because ideally that's what the money is for. The money is used for being able to pay your employees. And yes, they're on unemployment, so they may not want to come back to work because unemployment provides such a great opportunity for them as far as revenue. So if they don't want to come back to work, you need to either hire somebody else, or you need to write a have them sign a piece of paper that says they don't want to come back to work. Also, just so you know that if someone's collecting unemployment and they're making $4,000 a month, and before they were making maybe $26,000 or $3,000 a month, and they don't want to come back to work because of that, you have the ability to tell the EDD that you offered them a job. Now, if you do this, it doesn't necessarily, it like kind of puts a wedge between you and the employee. So you want to consider all your options. The other option, which you can do, is you can decide to have them volunteer until maybe the very last week of your loan period, and then pay them everything in that 1 week. There you go. So you're giving them a bonus for that 1 week, but it only affects their unemployment for 1 week instead of the 7 weeks before. So that would be one thing that I would consider doing. Let's see. And if you haven't been on payroll yet, you just cut yourself a check. All right. Any other questions about unemployment or your employees? Okay. All right. So we're going to go to the loan application here. And I got to find it. Here we go. Okay, so it's a 4-page application, and you can see the expiration date says 10/31, 2020. So you have some time to fill this out. One of the things that I've discussed with some of the people that I've helped with is that according to the bank, your Schedule C that you turn in, if you hadn't turned in your Schedule C and you hadn't completed your taxes for 2019 and you got the loan, there was an understanding that the taxes would vary because you didn't do your taxes yet. And so your expenses, maybe you would find additional expenses or whatever. So you want to just have an understanding that the numbers need to be somewhat similar, not extremely different. And so one of the things that you could do is, if they are slightly different, is wait to file your taxes until after the loan forgiveness, or yeah, that's what I would do. Okay, so let's go through this. So they're pretty specific, and it's not like, it's very specific, and some of it doesn't address the sole proprietor issues that I could anticipate some of you having questions on. So let's just see what we can come up with here. Okay, so you have your business name, business address. They're like talking about exactly how to do it. Enter the loan number. So you're gonna have to contact the lender if you don't have it, but it was I'm pretty sure it was on the loan paperwork that you signed. So we're right here with PPP loan amount. So you're going to enter the disbursed principal. Employees at the time of the loan application. So again, if you had one, because it was just you, or if you had two, you would have put that right there. Employees at the time of the forgiveness of the application. So you would put that down, and then you would, and then it says loan disbursement date. So this is all pretty basic, and you all have access to this. So this is on the IRS website. Or on the SBA website, I'm sorry. And also, if you can reach out to your bank, and they would have a link to it as well, and I can email it as well. I'll put it on my website. So I was telling you about how the disaster loan affected the amount. So it says if the borrower received an economic injury advance, you need to enter the amount. And then select the box that corresponds with your payroll schedule. One of the things that they are doing is that they are allowing, if payroll falls right outside of the PPP loan disbursement date, you can consider that part of the covered time period, which is cool. So enter the 8-week covered period of your loan. The first day of the covered period must be the same as the loan disbursement date. And then this is the alternative payroll covered period. So for admin convenience, borrowers within a biweekly or more frequent payroll may elect to calculate eligible payroll costs using the 8-week period that begins on the first day of their pay period following their loan disbursement date. So that's really cool. So you can definitely include the pay periods that are appropriate for your business. So it tells you, for example, if you received loan proceeds on Monday the 20th and the first day of the loan disbursement was the 26th, the first day of the alternative pay period is April 26th, and the last day would be the covered pay period, which would be June 20th. Borrowers who elect to use the alternative payroll covered must apply the alternative payroll covered period wherever there's a reference in the application. So just be consistent. Okay, so I don't think anyone on the call is this, but if you did receive a loan in excess of $2 million, then you need to check this out. So they are probably going to be reviewing, they said they were going to be reviewing everybody who received a loan in excess of 2 million. And just to double check, I guess, audit them. Make sure that it was actually economically challenging times for them, I believe. Okay, so this talks about the forgiveness calculation. So I'm going to scroll down so you can actually see what the application looks like. Okay, so they're just like in the, when you fill out your taxes, they like describe exactly how to fill out each line. So that's what they're doing. So when is your payroll schedule? What's your covered period? What's your alternative payroll covered period? So now we're here at the payroll and non-payroll costs. Okay, go back up. Okay. Okay, so enter total eligible payroll costs incurred or paid during the covered period or the alternative payroll covered period. So if you are unable to work, there's a couple things you can do. You can, like I said, bring your people back and have them volunteer and then pay them a bonus at the end. So they're only losing unemployment for that 1 week. And you can do, look at the list of the to-do things for your shop and see what people can get done. Do they need to be calling clients and encouraging them to come back, buying products, any of those ideas. Okay, yes, I will be doing a recording. All right, so number 2, enter the amount of the business mortgage interest payments during this time. So anything that you spent it on, they want to know. And you have to, it doesn't, and it says do not include prepayments. Remember, this was for anything that was owed and incurred before February 15th. And the other thing is that you really want to consider that you have to have all the documentation. So you're going to turn this loan application in, and that could be fine. And then they could come back and say, oh, I want to see those exact records. So you just want to have it very, very organized. Okay, enter the amount of business rent or lease payment for real or personal property during the covered period. Enter the amount of business utility payments. So again, you want to have the copies of the receipts. And then enter the number of the PPP schedule. This amount reflects the loan forgiveness reduction requirement for salary or wage workers in excess of 25%. So if you decrease their wages, so I don't think that applies to anybody, but in the event that you did, then again, it wouldn't be forgiven. And then again, it's just telling you exactly how to do it. Add lines 1 through 4, subtract line 5 from the total, and then enter the total, enter the number on Schedule A, line 13. So if you are yourself and you don't have payroll, then you would just leave this all, you just payroll. Okay. So eligible payroll costs. Borrowers are generally eligible for forgiveness for the payroll costs paid and payroll costs incurred during the 8-week period. So payroll costs incurred but not paid during the borrower's last pay period of the covered period are eligible for forgiveness if paid on or before the next regular payroll date. So if you did payroll early. Otherwise, payroll costs must be paid during the covered period. Also, for each employee that is paid more than $100,000, they only are allowed to get a certain amount, and we're going to talk about that. So for individuals who were able to receive more than $100,000 due to their medical expenses, I think that would probably be the reason. You would just account for the medical as part of your payroll. But you're actually only able to, like a self-employed person is only able to get, I believe, and it's on this application, $15,300 for the 2-month period. Even though you got 2.5 months, you're only able to technically take 2 months. So non-payroll costs eligible for forgiveness consist of the following: mortgage obligations, covered rent obligations. So if you have a home office, that definitely could be covered. Covered rent obligations, covered utility payments for anything that began before February 15th. So you can't have opened a new office in March or created a new lease agreement and then paid on that. So an eligible non-payroll cost must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing cycle. Okay. So again, here's the application. Let's see, I'll look at the question here. Yeah, okay, we'll talk about that. So payroll costs, adjustment for full-time equivalency. So, you know, are your people at 30 hours full-time or are your people at 25 hours full-time? What is considered full-time for your business, or is it 40 hours? So that would affect these full-time reduction numbers here. Okay. And then you're authorizing, you're basically saying, this is just like signatures, right? Talking about what you're asking to be forgiven. So the dollar amount for which forgiveness is requested was in fact used to pay costs for the eligible forgiveness. It includes all applicable reductions due to decreases in the number of full-time equivalents. It does not include non-payroll costs in excess of 25% of the amount requested. Okay. So it also does not exceed 8 weeks worth of compensation. So for the owner, employee, or self-employed, it's capped at $15,385 per individual. So again, this is going to be interesting because if you're a sole proprietor, that makes sense. But if you're an independent contractor, it may not, because you may have gotten 2.5 months plus medical. So that's why we're hoping that we can get some clarity on this, because it doesn't apply to everybody. Okay. So can you pay rent for 3 months since my loan has crossed 8 weeks into 3 months, or does this need to be only for 2 months rent? No, it could actually be 3 months, but the thing is that it cannot be more than 25% of the actual loan amount. And if you're on unemployment and you did get the loan, you cannot do both. And what's happening now is, I think in California, they're just automatically certifying people and they're not requiring you to say that you made money. So they may come back and ask for that money back. So you just need to be careful with that and try and report your earnings. I understand that if funds were knowingly used for any unauthorized purposes, the government may pursue recovery of the loan amount. So just make sure that you're paying it how you're supposed to be. The information provided in this application and the information provided in all supporting documents and forms is true and correct. So all that's, and then the tax documents I have submitted to the lender are consistent with those the borrower has submitted or will submit to the IRS. I also understand, acknowledge, and agree that the lender can share tax information with the SBA's authorized representatives, including authorized representatives of the SBA Inspector General. Okay, so I know for me that my P&L that I use to get the loan is not going to be the same as my taxes because I haven't entered in all my receipts. It's not going to be grossly different, but it's also not going to be exact. So you just say that you did your best. And our lender, like the lenders know that not everybody was 100% accurate. It's impossible for us to have been accurate, which is why that statement is just kind of not fair that it's even there. Okay. So I'm going to scroll down here. There are tables here, and this is what Schedule A looks like, and this is a worksheet for how to figure out your loan forgiveness. And then also, there's another table here, lower, right here. So you don't have to turn this in, but this does talk about like the employee, the amount that you paid them, and this helps you to calculate the numbers above. And then the reduction, the FTE reduction safe harbor, this is in the event that people decided they didn't want to come back to work. And so then that would not affect your loan forgiveness. And then it just goes way more into detail about what full-time documentation looks like. And then payroll documentation that you need to provide. Right here, it says payment receipts, canceled checks, or account statements documenting the amount of any employer contribution to the employee health insurance retirement plan. So they may not actually ask for this, but you need to be able to keep it. The other thing that's super important on this document, and I can go into more specifics, I just don't think we're quite ready because I'm assuming they're going to come out with one more application for people who are self-employed. So yeah, it says right here that you have to maintain, but you don't have to submit the Schedule A worksheet or its equivalent, documentation supporting the list of all the worksheet in Table 1 and Table 2, documentation regarding employee job offers and refusals, firing for cause, voluntary resignations, and written requests by an employee for reductions in work schedule. So everything has to be in writing. And that then would support the FTE, full-time employee reduction safe harbor. And then they go more into demographic information, and if you want to fill that out, but again, that's voluntary. So it's very, very detailed, and it's pretty straightforward, but it's not 100% clear at the same time as far as what they're going to do with somebody who, like myself, I made over 100,000 and 2.5 months of 100,000 in pay for business or for a sole proprietor, that's 21,000. Yet they're telling you that you can only get 15,000. So that means that you better get at least 5,000 in that 25% of mortgage, cell phone bills, utility bills, and the rent payments and all of that. All right, any questions on this before we move on? Okay, let's see. All right, we're gonna go back to, let's see, I think there's a couple questions here. Okay, do you know if we can get the total amount of the loan recalculated? Let's see here. Do you know if we can get the total amount of the loan recalculated after it's been funded? Per my bookkeeper's advice, I used January to December 2019 income for my application with Square. Later, I learned that we could have used the preceding 12 months before the application date to calculate. My business, yeah. Okay, so no, the answer is no. Once you got the money and you accepted it, they're not going to go back and let you get more. So no. I've tried to help people with that, and it has not worked. Any other questions regarding stuff like that? Good questions, though. Okay, so now what we're going to do is we're going to go back to my presentation. So what I would recommend is that you look at that application, and then you highlight anything that you have questions on. And then we can go over it. You guys can make an appointment with me or let me know. All right, so the EIDL loan. So it was a $10,000 grant, and it was based on employees, and now it is $1,000 to $10,000, depends. And it was however much, then it went to 15, now it's at 150K. So some people are now just getting approved, or now they're able to take this loan. What you want to do is you want to see if that is the right thing to do, because it does affect your PPP loan, and this is a 3.75% interest. We don't know what the economy is going to do, so it might be a good idea to take the cash and sit on it, because you can always pay it back, or maybe not. That's up to you. I'm always like wanting to have as much cash as possible to be able to leverage my business and what I'm doing, but not everyone else thinks that way. So just consider that. So the loan amount was determined by payroll and cost of goods sold, and now they're just capping it. So no more than 150K. Okay. So pandemic unemployment insurance. Now, if you receive the PPP loan and you got it in May or late April, you could also apply for pandemic unemployment assistance. So the way that works is if you're self-employed, starting March 28th, the CARES Act passed, and so you're able to get that extra $600 from March 28th on forward. Now, again, once you have gotten the PPP loan, you need to deny unemployment, and then you can always get it again after the 8 weeks is up if you're still unable to work or you had a decrease in clients. So, for example, you're a personal trainer and you aren't able to do anything online, or you're a salon person and at the end of 8 weeks, it's going to be June 15th, and you're not necessarily going to be able to go back into work June 15th. Hopefully you will be able to, but let's say, worst case scenario, everything's still not open. What you can do is you can then go ahead and get back on unemployment. The case stays open for your case with the EDD stays open for a year. So you would just certify that you didn't make any money. Okay, so under employment history, if you are self-employed, you want to put no. Do not put your own EIN or social security number. If you do that, you will get denied. So you want to file a new claim if you've already applied for unemployment insurance but are eligible for PUA because you're a business owner, independent contractor, or self-employed worker. So if you applied before April 28th, you probably would have gotten a zero balance award notice. But if you applied after April 28th, then you would have gotten you would have been able to get like $130 to $160 a week plus the $600. I've heard, and I haven't been able to do it myself, but I've heard that if you show proof that you made more than $17,000 in a year, then you can actually qualify for more of the California unemployment, which is up to $450 a week, and then $600 on top of that. Remember, if they're continuing to give you money because they're not requiring a certification, what I would recommend is that you put that money and leave it on the bank card because you may have to pay it back. Okay, so if you are a small business owner, independent contractor, self-employed gig worker, here's how to answer these questions. On the employment history screen, when you supply your last employer, you select no. On the availability information page, answer to question number 7, you say no. And on the disaster information page, 1A, number 3, you would answer you are an independent contractor. If you got paid in cash, select none of these options apply to me. All right, so that is pretty much it for this. If you want me to, I can more specifically go over the application. What we're gonna do is I'm going to use myself, and I'm going to, in the next webinar, and I'm going to actually fill it out in detail so that you guys have a better understanding of how it works. What I do suggest that you do is look at that application and get familiar with it and see what you need. So you're gonna need all the receipts, all the canceled checks. You're going to need to show that you moved money from one account to another account to quote unquote pay yourself, and make sure that if you made if your loan and you're a sole proprietor and you brought in over, they gave you a loan for over $20,000, it's really important that you use 25% of that on the utilities and all of that stuff. Medical does not count. Medical would be not payroll. It would be part of it counts as far as payroll goes with respect to like the 75%, but it wouldn't count towards your $15,000 or whatever they're saying. So the government seems to be kind of behind with people's questions. So they will be probably sending out something else to refine that application, just like they've been sending out these interim final questions. So if you have seen any of the interim final question sheets, there was one that came out May 13th. That one basically really, it does answer some questions, but it really addresses, like, if you took the loan and you think that you shouldn't have taken the loan. Anyone on this call, it wouldn't apply to you, but people like maybe the Lakers or Shake Shack who ended up giving their their loan back, it would apply to people like that who maybe didn't really qualify. Even if they did have loss, economic hardship can be defined as like, are you able to pay your rent? Those people making tons of money are still able to pay all their bills. They're just not profiting as much. So there is a difference. All right. So please, if you have any questions, put them in the link below. And what I'm going to do is, or in the chat box. And what I'll do is I will answer them right now. All right. Any questions? Did you guys want me to go more specifically over the forgiveness application? Is that helpful at all? It just seems a little bit convoluted right now because it just came out. But if you guys want to put in the chat, if you want me to go over that, I'm happy to. No? Okay, so just to recap, you're not able to adjust your loan application once it's already been submitted. You can always pay the money back if you don't use it all. And if you have employees and they're not working because you can't be open, you've got to be creative. So make them clean the facility, make them make phone calls to the clients, tell them all the safety measures that you're going to be having once you reopen again. Those are things that your employees can do. And if they're making more money on unemployment than with you, you can have them volunteer and then give them a bonus. Okay, so what I mean by having employees volunteer and then at the end you can pay them, like literally they come in and they work, and then what you do is you give them you give them hours, or they decide to show up for certain hours, you know, between 5 and 6 hours a day or whatever it was that their schedule used to be. And then on the 7th week, you give them a bonus. And so they're not looking, if you look at that application a little carefully, they're not, you're going to give them a 941. You're going to give them a summary. You're not going to give them a, this is what every single employee. So what that does is that allows you to be able to pay somebody for that 1 week and give them a bonus that covers all the previous time that they worked. So they're not actually working for free. Okay, so that form that I was showing you, the application form, which let me see if I can pull up again. That application form was emailed by the bank, and it is on the SBA website. I'm going to share my screen one more time and you can see it again. And I can, I'll have it on my website in the next few days, and I will be able to get that to you. Here it is. Okay, so here is the bar application form. It's 11 pages long. Again, you do not have to, what's cool about it is that you don't have to show everything. They just want you to have the records. And there's so many people who got this loan that it's going to be hard for them to go over everything. But if you have any red flags, like your Schedule C, you made no money in 2018, and then all of a sudden you made a ton of money, that wouldn't necessarily be a red flag. But if your loan, like if you turned in your taxes and you tried to you know, not account for any profit, and then your loan app, you know, and it's a huge discrepancy between your loan application and your taxes, which, I mean, that I think it'd have to be a gross change. I think no one on this call falls into that, because none of us got a loan that was more than $2 million. So the application just looks like this. And again, you'd put in your loan number, which you'll get from the lender. And this is from sba.gov. And like I said, I can have it on the website, jaimijansen.com. And what you can do is I have a YouTube channel. It's Jaimi Jansen on YouTube, and you can subscribe, and then every video and everything that I do, you'll be able to get an update. So with each line, they itemize each line, and then there's a description of how to fill it out, just like you would do on your taxes. So if you have an accountant, you can have them help you. I'm going to probably be doing a bunch of these for people as well. So just figure out who you want to help you if you don't feel confident in doing it yourself, and then we can definitely do that for you. I'm really happy to say that I've been able to put more than $5 million into the hands of small business owners from helping with this loan. There's still funding available, so please refer people if anyone needs help. All right, so then they talk about the actual forgiveness amount. And again, there's a calculation sheet. That's why this is 11 pages long for each one of these. And so as the forgiveness, like my forgiveness starts, or my forgiveness application would need to be due sometime after June 17th, because that's when my 8-week period is over. And notice that you have until October 31st, 2020 to get forgiveness on this loan. Okay. So this is the part that I think is kind of interesting right here, which it says does not exceed 8 weeks worth of the 2019 compensation for any owner, employee, or self-employed individual. So I know some people who are self-employed, they were able to receive more than that much money. So you just want to make sure that the other amount, that $8,000 that you got, goes towards utilities and other costs. And it can't go to prepayment. So it has to go to things that you may have owed in the past. So, and then just like the loan application, this forgiveness application, you're acknowledging a bunch of different things. And then it's a Schedule A, and it talks about how you get these calculations. So it's pretty straightforward. And then again, this goes into full-time employees. So this doesn't apply to someone who's self-employed, which is why they got to come up with something else, because it would just be one. And basically the government is just a little bit behind. So we took all the money because we needed it, and now we're trying to figure out how we can get it forgiven, and it's kind of a pain. But you can do it if you're diligent. So you just have to keep all your records. Okay. All right. Any other questions before we sign off? All right, guys. Well, thank you so much. And what I'll be doing is I'll be sending a copy of my webinar, and I will also be having this fast track borrower information form on the website, jaimijansen.com. Have a great day. I'll stay on for a couple minutes if anyone else has any questions. Feel free to unmute yourself if you just want to ask. All right.